and welcome back to Living Investing in Cleveland. My name is Sophie Boland, and I am a realtor and long-term investor in Cleveland. Today is January 19th, 2022, and this is your monthly market update. But before I get into that, I would like to remind you to subscribe to this channel so that you do not miss any future episodes. So what has been happening in the market? Let's first talk about sellers. This chart shows months of inventory since 2019. If you remember, a balanced market has 6.5 months of inventory. That's right, way up here. Clearly, we have been nowhere near a balanced market in years. In fact, we have been fluctuating between 1.9 months and 4.8 months of inventory. 4.6 months. And that was in May of 2020 when the entire country went into shutdown because of the pandemic. But still, at that time, we were very much inside a seller's market. In case you are wondering, the record low of 1.9 months of inventory occurred a year ago in December 2020 and January 2021. Right now, we have the national data from November 2021 showing that we have 2.3 months of inventory, still very much a seller's market. So what about the buyers? What are they doing? According to Showing Time, which schedules the great majority of all showings in the US, buyers have been increasingly active over the last 5 years. And there were more properties shown in November 2021 than any other November, including November 2020. So this means that buyers are still very much engaged. This could also indicate that more buyers are entering the market. Remember, we do have all of those millennials who are starting to enter the market, and there are 72 million of them. However, increased showing activity did not translate into increased pending sales, as this chart shows. The number of homes that went under contract fell slightly year over year. So we know from the showing activity data that buyers are still very much engaged. They are the demand side of this market, which very much is driven by the principles of supply and demand. So what is going on with the supply side of the equation, which is what we refer to as our housing inventory? Not fantastic news if you are a buyer. The national housing inventory has dropped by a whopping 26.8% in 1 year. That's right, that is huge. In Ohio, that drop has been 12%. If you are a seller, this is fantastic news as there is little competition for you. But do not get complacent or greedy. Rising interest rates and the seasonal increase in new listings will create some pressures on sellers, especially if your property has some obstacles. My recommendation is to list now when there is little competition instead of waiting until spring like everyone else. Seriously, what is the logic in waiting just so you can be in a crowded field? The last item that I wanted to discuss today is equity growth. In case you haven't been paying any attention, it is surging. Nationally, a homeowner gained an average of $56,700 in equity. That is a mighty nice end of the year bonus, people. This is one of the reasons foreclosures have not surged. People have enough equity that if they are in a bad situation, they can sell their house. They don't have to lose their house. In Ohio, the average homeowner gained $27,000 last year. That is $2,250 gain every single month. So this increase in equity represents a big opportunity for some homeowners. So what could this extra equity mean for you? Well, it really depends. Are you an empty nester? Is now the time to sell your larger, more expensive home, move into something that is smaller and less expensive, and in the process, create a nice little nest egg for yourself? Possibly. Are you a remote worker? Are you living in a city like Seattle where the property prices are quite high? Where if you were to sell that house and move to a place like Cleveland, which a lot of people are doing, you might be able to use the equity from the sale of your house in Seattle to purchase a home in Cleveland for cash. Can you imagine a life without a mortgage? Are you actually looking to upsize? Are you ready to sell your first home and move into your forever home? You may have enough equity in your first home to more than cover the down payment on your forever home. But what if you're not interested in moving? You are happy with the home you have, and you want to know how you might be able to benefit from your extra equity. Well, have you considered purchasing an investment property, possibly to fund your retirement or your children's college education or your grandchildren's college education? These are just some thoughts for you to consider. But the good news is, for all of us who are homeowners, we have gained quite a bit of equity in 2021. So that's it for today. Thank you for joining me. Please feel free to add any questions or comments below and like my video. And don't forget to subscribe so that you don't miss any future episodes. And that is it. Thank you for joining me, and see you next time.